Thank you, Chairman and members of the committee. I'm here, I'm the sponsor of House Bill 5161, also known as the Payday Lending Bill. This bill is, these payday lending places are predatory, and majority of them are in our low-income urban communities. And while they provide a service that many people in our community believe that they need from them, it is also preying on their inabilities to be able to obtain loans or cash their work checks by any other means like a bank. Payday lending charges at a higher interest rate than any other institutions, causing the customer to pay more for their own money to be either cashed or to borrow money. This ends up being like a merry-go-round. So if you have if you need a loan, you provide your pay stubs or your check, which gets held, which is also called deferred deposit transactions. And so the payday lending will not cash that particular check until the 13th day, and that is when you are due to pay your loan back. Most people who use these kinds of places to cash their checks or to get loans work on a 2-week basis, and they get paid on a 2-week basis. And so if they're getting paid on the 15th day, they're already deferring on their loan, and so they are being charged for not paying their loan on time. So this is what we would end up calling predatory, because they know that most people get paid on the 15th day. Deferred deposits transactions puts the customer in a circle of debt. Most people get paid every 2 weeks, like I said, and the current law allows the payday lenders to cash the customer's check on the 13th day. Therefore, it just continues to put the customers in a cycle of poverty, and it doesn't actually help them to get out of either the debt that they need the loan for, or doesn't actually help them get out of poverty versus the way maybe getting a loan from a bank. The more technical stuff, there's people here that are able to probably answer more of the technical stuff. However, these really are in communities where our community needs to understand and be taught that they probably do have credit, enough credit that they couldn't go get a loan, whether it's at a bank, for a much lesser interest rate. This is part of also financial literacy that we need in most of our communities. So I'm happy to answer any questions, probably the technical stuff. We have some people here that could answer that, but thank you so much.
Thank you. Are there any questions for the sponsor? Seeing none? Thank you. And Representative Lombardi.
Thank you, Mr. Chairman, members of the committee. I'm so glad that several of my colleagues have contacted me relative to, and also outside agencies. I guess I've arrived when it comes to this bill. I've been putting it in for several years, but I think it's because of my colleague on the left and her interest in this that has probably pushed this over the top. But so anyway, the act would cap the annual percentage rate for payday loans to 28%, require maturity date of more than 90 days from loan closing, prohibit fees, interest payments at more than 60% of the principal loan amount, and require that payments be made monthly, with each payment being no more than 25% of the loan's original principal. So I was speaking to Sarah Patterson Cabral from DBR, the Division of Banking, and she said that they are on board. If I would consider some amendments, and I certainly would do that. And what they are is adding language to the bill that would amend the language in 19-14.4-4. Subsection 4, fees for services. This section allows for a check cashier to charge 10% of the funds advanced. Currently, 10% of the $500 advance is $50, which would create an APR well over 28%. And secondly, changing the language in 19-14-5-5.1, that was 0.5-5.1 subsections A and B to increase the term from 13 days to 90 days, which certainly makes sense. And I would certainly, I don't know if you have a copy of this. Do you have a copy of this, Mr. Chair? If you don't, I will make it part of the record, if you don't mind. Great. Thank you. And my colleague is absolutely right. What these are predatory loans, and it preys upon those people in the lower income areas, like myself, like her, Falls, Pawtucket, and I don't want to speak for any other. And it's a predatory loan. And affects, who does it affect? Low-income people and people of color, once again. And they're already suffering from what they call redlining. Many of you know what that is. So and we're just praying, but they are preying on them, and we need to have some controls and a governor on this type of stuff that will not allow it to get out of control as it is. There is a wide range of support. We're also seeing if our colleagues on the other side of the aisle, Republicans, are very interested in this legislation. I'll be putting a letter together which will be on the floor by Thursday. I already have 36 or 37 commitments on the D side, and if we get the R side and the I's, well, I guess we're going to be asking that the Speaker seriously take a look at this and put it before us, and, you know, up or down once and for all. It's been around too long, and we need to stop this these predatory actions by these individuals that really have no regard. And I can tell you this here, in our neighborhoods, people go to jail for doing this. That's all I will say. And with that, I will endeavor to answer questions if I can.
Are there any questions for the sponsor? Chair. Representative Newberry.
I just want to point out for the record that not only did I co-sponsor Rep. Alzate's bill, but for years when former Rep. Ferry was here, I was the lead co-sponsor of the bill. So,
there you go.
Yes, the I can't speak for all Republicans.
Yeah.
A lot of us support this too.
Well, thank you so much, Rep. Newberry. Are there any other questions for me?
Representative Serpa.
Chairman, I have no questions, but without objection, may I be recorded present and recorded in the affirmative on holding all bills for further study.
So ordered.
Thank you.
And Representative Sanchez.
Yeah, Representative Chairman, I'd like to also be marked present.
So ordered.
Thank you. Just glancing at the bill, I want to applaud and thank Representative Alzate and Representative Lombardi for introducing this bill. I can personally say, and because I've seen firsthand how small business owners, working class families, and black and brown communities, especially in the urban core throughout the state of Rhode Island, have been victimized by these acts that have been, taking advantage of most vulnerable communities. So I'd like to thank you both for introducing this piece of legislation. Thank you.
Mr. Chair, it's not only the black and brown, it's also the Southeast Asian, the yellow, people of Oriental background that are inflicted by this and victimized by this.
Thank you. Are there any other questions? Seeing none, thank you very much for your testimony.
Thank you so much.
So we have a lot of witnesses here today. I am just going to ask that the witnesses that come up today, if someone who has went up before you, said something that you absolutely agree with, it's okay to say I agree with the person who testified before me. And if there's anything additional that you'd like to add for testimony, that's fine too. If you submitted written testimony, all that written testimony comes to the committee, to all the committee members. We do review it, and as we review everything. So with that, I will start off with Robert Craven.
Good evening, Mr. Chairman, members of the committee. My name is Robert Craven, Jr. I'm the Director of Legislative Affairs for Treasurer Diossa. I am testifying on his behalf in support of House Bill 5160, which aims to curb payday lending practices in Rhode Island. As you heard from Representative Alzate, a payday loan, which is known in Rhode Island as a deferred deposit transaction, is a short-term and high-interest loan that typically matures on the borrower's next payday. While such loans often present as a quick and simple way to offset short-term expenses, borrowers often become trapped in a cycle of indebtedness, driven by fees and exorbitant interest rates. Faced with unaffordable payments, borrowers must take out another payday loan in order to service their existing debts. Once caught in this self-perpetuating cycle of dependency, it becomes difficult to break. Over 2 decades ago, the General Assembly amended state law to permit payday lending practices. Though prevailing law somewhat limits these practices, Payday lenders are permitted to charge an astonishing 260% APR on loans before fees. By comparison, every other state in New England has either caps APR at 36% or prohibits the practice in its entirety. As mayor of Central Falls, Treasurer Diossa saw firsthand the impact this can have as neighbors turn to payday lenders to cover rent or daily living expenses. Saddled with unconscionable interest payments and fees, families living on economic margins were left with few options: either default on the loan, return to the borrower for a second or third loan, or are simply left without the financial means to cover the cost of living. The Treasurer's Office remains committed to doing all it can to financially educate and empower Rhode Islanders. And this practice has been permitted in our state for far too long. On behalf of the Treasurer, that's why I urge this committee to help protect the financially vulnerable families in Rhode Island and support this bill. I'd be happy to take any questions.
Are there any questions for Robert? Representative Serpa.
Chairman, I know we have a lot of witnesses, but Mr. Craven, I just have one question.
Please.
Now, this bill has been around for a while, and I've kind of lost track of the ins and outs it's taken. When it was first introduced a number of years ago, is it true that there is no prosecution if a borrower defaults on the loan? He or she is not prosecuted, or there's no penalty? I just want some clarification on that, please.
I'm uncertain what the present state of the law with regard to prosecution is, but I'd be glad to get back to you with a more detailed answer
because
on that.
If I remember from years ago, I think that's how it was, and I'm not sure. And I just want to know if something has changed. And do you know the limits that people can borrow?
Presently, they go up to 260% of APR. There's a $500 limit.
Oh, that's what I meant.
Yes, a $500
so that's the most
limit.
I could borrow going in is $500.
Correct.
If you could just check
on a particular loan.
Okay, if you could just check on the prosecution, because I'm just curious.
Be glad
to.
Okay,
that'd be good. Thank you.
Thank you.
Are there any other questions? Seeing none, thank you for your testimony. So we'll take up a few people right now. We have David Veliz, Eric Hasselhurst, Bill Staderman. Susannah Holloway. Okay, you may proceed with your testimony.
Thank you, Chairman and committee members. My name is David Veliz. I am the director of the Rhode Island Interfaith Coalition to Reduce Poverty, a coalition of faith leaders and advocates from many faith traditions all over Rhode Island that are dedicated to fighting poverty and inequality. I'm here to support Bill 5160. Thank you to Rep. Alzate and all the co-sponsors. Payday lending has been unregulated and has been disproportionately impacting poor communities in Rhode Island for too long. As a coalition that fights poverty and inequality, we know that not only do we need to feed the poor, but in order to really fight systemic poverty, we must change the practices and policies that perpetuate the system of oppression. And we believe that the rates that payday lending is having to folks pay back is part of that problem. Our faith traditions are rooted, many in our scriptures, on how we need to uplift the poor, protect the poor. I'm not going to say too much of that, but I will say this passage from one of our faith traditions, which says, "He who opposes the poor for his own wealth is therefore poor." Now, the second part of that is not speaking of monetary poorness, but it's saying in character, in the face of the Creator, as said in that scripture, that we must not be oppressing people for ourselves to become wealthy. I'm not going to say the rest of the things, so they were already said, and I know there's a lot of people here testifying, but I will say thank you for your time, and I hope in advance, I thank you in advance for protecting poor communities in Rhode Island by passing this bill and regulating payday lending. Thank you.
Thank you. Are there any questions? Seeing none, thank you. Representative DeSimone, you want your vote recorded in the affirmative?
Yes, please.
So ordered. All right. Next witness.
The microphone, okay, it's on. Well, there's a couple of things that I start off with, maybe just doesn't have anything to do with the bill or with the payday lending. First of all, people that take out a payday loan are not stupid. Number one, you have to be 18 years old at least. Number two, you have to have a job. Number three, you have to have a bank account. It's a simple thing. When you walk in, there's a big sign, tells you whatever it is. If you have a problem, you can report it to the DBR in the state, which nobody does. Okay, that's one thing. The other thing is, I wish that there was like 240%. I don't own any payday loan stores. Years ago, I did, but one of the things with that is 240%. You'd be a millionaire if you were doing it. I'm going to tell you something. Any one of you sitting there, if your nephew came up to you, let's say on a Sunday, and said, you know what, I have to give a guy $100 because I'm buying something, blah, blah, blah. You'd say, okay, I'll give you the $100. Why didn't you go to the bank? He said, because the bank is closed. Okay, I'll give you the $100. Give it back to me tomorrow and give me back a dollar bill with it. Okay? That's simple. That's what people, that's 365% APR. So when you're talking here about people that tell you about APR is 240%, no. The payday loan is a couple of weeks, okay? That's the first part of it. It's 10%. That's what it starts with, is 10%. Not 260%, because if you have to keep going with the loans and going and going and the person's not paying you, why would you do that? None of you would do it, loan money to people that can't pay you back. That's number one. Number two, okay, to go to court to try to collect, the average loan is about $275. To try to go to court and collect that, I don't know if anyone here is an attorney, but they would probably charge you $500 to go in and be able to collect the $275. So it doesn't happen. The bottom line of all this, and I don't want to go on too much longer, but the bottom line of it all is payday lending is something that's terrific for somebody that needs money now. Let's say their car breaks and they got to get to work. If they can't get it fixed, they can't get to work. Go to a payday loan, got the money right away, pay it back, fine. I think that the idea of putting a cap on it, it's not 260%. And banks, by the way, charge $35 a day sometimes if you overdraw on your account. $35 a day, you know that's over 800%. But they don't have any percentage on that. That's why people go to a payday lender, not to the bank. Any questions?
Are there any questions for the witness? Seeing none, thank you very much for your testimony.
Thank you.
All right, Susannah.
Thank you so much. I'm Susannah Holloway. I live in Barrington. I'm a Rhode Island voter. I'm here to ask you to please support passage of House Bill 5160 and finally ban payday lending in the state of Rhode Island. Please let this bill come to the floor of the House for a vote. Payday lending is usury, and it is a horrible exploitation of low-income Rhode Islanders. Payday loans charge huge amounts of interest and trap people in debt for months and years to pay off small initial loans. They can end up paying 10 times the amount of the loan. The slumlords of banking make billions every year off of those who can least afford it with payday loans. They are not real banks. Real banks are more closely regulated and give much better loans. We also have banks in Rhode Island that will give small loans. We created this system of payday lending under state law, and we can end it pure and simple, and you should. Please stop this practice. Just this month, the New York Times published an article by Professor Matthew Desmond, who studies why our government programs to reduce poverty, such as housing, get nowhere. It's because of the rampant taking money from the poor. Block grants that fail to fund actual anti-poverty programs and put real money in people's pockets, stealing their wages and the value of their labor from all kinds of different labor practices. But the third item that Professor Matthew Desmond talks about is charging exorbitant banking and payday lending fees. This is what the poor pay throughout our country, Professor Desmond writes. Every year, almost $11 billion in overdraft fees, $1.6 billion in check cashing fees, and up to $8.2 billion in payday loan fees. That's more than $55 million in fees collected predominantly from low-income Americans every day in this country. These people are the least able to afford this usury. Professor Desmond goes on to note that poverty isn't simply the condition of not having enough money, it's the condition of not having enough choice and being taken advantage of because of that. When we ignore the role that exploitation plays in trapping people in poverty, we end up designing policy that is weak at best and ineffective at worst. Please start with banning payday lending. Here in Rhode Island, as we focus on...
Is that an article? Is that...
Oh,
if you could just provide a copy of the article to the committee.
Okay. I have one more paragraph that's me.
Okay.
Here in Rhode Island, as we focus on building housing, we must also focus on ending payday lending. The two go hand in hand. People mired in an unending debt to billionaire corporations won't be able to afford to live in the housing we build for them. Rhode Island is not a wealthy state. Our citizens work hard and are generous with their tax dollars for social programs. We want to end poverty and help those in need. It's your job to spend our tax dollars wisely. Protect our tax dollars from going to these payday lending companies and help us build social programs that will lift people out of poverty. Thank you.
Thank you. Are there any questions for the witness? Seeing none, thank you for your testimony. I see that Eric is here. If you want to step up. Margaux Morriseau and Alan Krinsky. And then while everyone's coming to the microphone, George Nee from the AFL-CIO signed up in favor and not testifying. Joe Rubin from OPPFI signed up against this bill, not testifying. May proceed, Margaux?
Sure.
You may proceed, Margaux.
Okay, got it. Thank you so much, Chairman Solomon. I also want to thank Representative Alzate and Representative Lombardi for putting forth legislation that would curb this industry. My name is Margaux Morriseau, and I currently work as a Deputy Director at the Rhode Island Coalition to End Homelessness. Previous to my work at the coalition, I worked for a community development corporation for 18 years. It was during that time in 2009 when I first saw the devastating effects that payday loans have on communities. I was working in Woonsocket, in the neighborhood that I was from, and running all of the resident services programs for over 250 families. And I started to see an enormous amount of residents that I consider neighbors and friends fall behind on their rent and end up on the list for evictions. And it was my job to work with them and trying to help them stay in their house and not become evicted. And when I started to see the common thread of what was causing them to be on the list of evictions, it was the payday loan store that had opened up right between the neighborhood laundromat and the neighborhood pizza parlor. And that payday loan store was targeting our residents very aggressively by putting things on their doors, on their pizza boxes, every way that they could. So at that time, I spoke to my uncle, who was then a state representative, Frank Ferry, over a family dinner. And I let my uncle know that this practice was happening, and he thought that this should be an easy thing to fix. It makes sense. People shouldn't be charged 260% APR for a loan. They shouldn't have a loan term that's only 13 days. So the first reform bill that we put in 13 years ago was simply to remove a carve-out that the payday lenders got from our state's usury laws. They're the only industry that aren't forced to follow the same rules as all the other lenders in our state. So taking away that exemption is the easiest way to fix this problem. We have a usury law on our books for a reason. We don't want loan sharks in our state, and payday lenders charge even more than the loan sharks of the old days. The governor and the Secretary of Commerce have even stated that the current 18% interest rate penalty on late taxes is bordering on usury. So if that's the case, 260% is about 14 times that rate. With this bill, lenders would be welcome to stay in our state if they adhere to the 36% cap. A predatory business model may not work under that cap, but responsible lending does. As for consumers, they will save millions every year that would have been lost to out-of-state predatory payday lenders. Families would better afford their living expenses, remain banked, and use money in the local economy. A current poll shows that findings that we conducted in 2012 are still true this year. Rhode Island voters overwhelmingly support payday lending reform. Independent studies have shown that there is a significant economic net gain when payday loan stores go away. A conservative estimate from the Center for Responsible Lending suggests that payday lending fees drain $7.5 million from the pockets of Rhode Island workers every year. People who borrow find much safer resources for meeting financial needs and are relieved the payday lenders are gone. We should remember that Senator Reed passed the Military Lending Act that banned payday loans for members of the military and their families because the stress they caused was considered a national security threat. It is time that we extend this protection to all people in our community. Furthermore, we believe that after 13 years of hearing this bill, it should be allowed for a floor vote. Legislators have held it and studied it, and we have talked about it and provided credible data year after year. You asked us to make sure that there were alternative products available, and we have done that. We are one of the only states in the Northeast that allows this predatory practice, and it's time to act. And I'm also happy to answer Rep. Serpa's question about are there any penalties or fees? So what happens when somebody doesn't pay back their payday loan on the 13th day, when most people in Rhode Island get paid every 14 days, is the person has the choice to go back to the bank, back to the payday loan and take out another loan. The average lender or borrower in Rhode Island rolls over a loan 8 times before they can pay it off. If they do not show up to the payday loan store to pay off that loan, the payday loan company has a post-dated check from the borrower. They will deposit that check up to 3 times a day in the bank to try and recoup on the loan that they were given. So not only is the person now indebted to the payday loan company, but they have sometimes bounced check fees up to 3 times a day because of that loan. And the payday loan companies are extremely aggressive to try and get their money back. So they will call your employer, they will call your landlord, they will put big stickers on the door that are impossible to get off. So it's a very predatory and harassing way to recoup on money, and it's not a benefit for communities at all.
All right, are there any questions for the witness? Representative Phillips.
Actually, it's more of a comment, and Ms. Morriseau and I have been talking for years about this, and being a former financial institution person, I've seen people that have taken these payday loans out, that not only do the payday loan companies try to deposit the check, but after that happens, it keeps bouncing checks that they've written to mortgage or whatever it is, and they end up having $200, $300 a day overdraft fees. So this is absolutely needs to come down and come in line with all the other banking institutions. So thank you, Chairman.
Yeah, I can tell you that's the first I've heard that. I didn't even know that was the case, and that's awful if that's what's happening. So that's definitely something that needs to be addressed. There are going to be a couple of witnesses after who maybe will be able to address that, who signed in opposition to the bill after you. But are there any other questions? Seeing none, thank you for your testimony. Eric?
Thank you, Chairman, members of the committee. Eric Hasselhurst. I'm here on behalf of the National Association of Social Workers. That is the largest membership organization of professional social workers in the world, and they are working to create and maintain professional standards and to advance sound social policies, and we agree wholly with everything that Margaux just testified on. She's an expert. She's been fighting on this for the better part of a decade, and we stand firmly behind her and urge you in passing this bill. We also see this as she was just pointing out, this perpetuates the cycle of poverty, and this body is considering lots of legislation related to housing. We see this as directly related to the housing crisis, and that passing this bill can help mitigate what's happening throughout the state. And we did submit written testimony. I won't read it to you, but I just want to make that one point, and also thank Margaux for her years of advocacy on this effort. It's definitely the year to do it.
Are there any questions for Eric? Seeing none, thank you. You may proceed.
Thank you, Chairman Solomon, members of the committee, for this opportunity to testify. My name is Alan Krinsky. I'm the Director of Research and Fiscal Policy at the Economic Progress Institute. We're a nonpartisan, nonprofit education, research, and advocacy organization fighting against poverty and for economic opportunity for all Rhode Islanders. I'm here to testify in support of both of these bills from Representative Alzate and Lombardi, both of which would effectively end payday lending in Rhode Island. One, the former, by repealing the special carve-out that allows the payday lenders to play by separate rules from other small loan lenders, and the latter that would place stronger regulations on the industry. I realize the industry would like you to believe that they're providing a service to people in need, but the reality is otherwise. What they're providing is access to debt, to a cycle of debt, and not to credit. And in regard to this, we heard earlier about 10% interest, so I'd happy to talk about the math more, but if you pay $50 on a $500 loan, and then you have to renew the loan to pay off the first one, you have to pay another $50. It's not you've then borrowed $1,000 and you're still paying 10%. You've now paid $100 really on that original $500. And you do that a third time, it's $150. And after 10 times, you've basically you've paid $500 in fees on the original $500. It's not like you've borrowed $5,000. So that's how we get we get up to 260%. I've included in my written testimony this diagram here, which shows this was a document from the Consumer Finance Protection Bureau that they got an enforcement action that was a training manual for payday lender employees. And it shows how they're trained that people will be caught in the cycle of debt. There's no exit from that circle. And the reason that we know that this industry is not helping people is that if this industry was giving someone a loan and they used it once to fix their car and they paid it back and that was it, they would go out of business. They wouldn't do that. The only reason they're in business, the only reason they make a profit is because people have to turn over their loans 8, 10 more times. Otherwise, they would leave the industry. The business model is profitable only because of that. If we make them play by the same rules as other lenders, they will voluntarily close their businesses. They do it because they can get away with it. And they target communities of color, as the Rhode Island Advisory Committee to the U.S. Commission on Civil Rights concluded in 2018. So this is an equity and civil rights issue as well. And some ask, what will people do if they don't have this option? So people find alternatives, and increasingly there are small loan alternatives available from credit unions and even the larger banks. And someone shared with me once what might be a sort of a harsh metaphor, but imagine someone's hungry and you offered them some poisoned food and say, well, I have to help them, they're starving. That's not really helping them. We find other ways, or they find other ways. This payday loans are not a way it's not a healthy, reasonable option, and we should not encourage them by allowing this special carve-out to continue. And I'll give one other sort of example. Now let's imagine that the chambers of commerce or some other organization came to you and said there was this businesses in the state that were targeting small business owners with this product that charged them 260% interest on loans. No doubt someone would propose a bill, and the General Assembly would act very quickly and decisively to prevent this sort of exploitation of small business owners. Now, why do I think the GA would act so quickly and decisively? We just need to look back a year. Last year, the governor made a proposal in the budget, and it was in the final fiscal year 23 budget. And the proposal was to reduce from 18% to 12% the tax on the interest on delinquent tax payments that people make. And this applied to individuals and corporate tax and small business owners. So people, whether knowingly or unknowingly, they had a delinquent tax bill. So now the minimum is not 18, it's 12%. And the governor and the then Secretary of Commerce, in defense of this, said the 18% was close to usurious rate. So if 18% is almost usury, I have to ask you, what is 260%?
Thank you.
And if the constituency were small business owners we're talking about today, a 206% rate. I have no doubt that the General Assembly would act very quickly to address this. That got done in 1 year in one legislative session. But when the constituency is not small businesses, but the poor, largely the poorest in Rhode Island, we've had almost a decade and a half without acting, and I think it is time to act on that. If you need additional time, so I would employers that it's been held through a study. I implore you not to let this disappear again. If you need time to study it further, please go ahead. I'd be happy to discuss this further beyond today's session, but I really urge you to bring this back to the committee to vote. And if the majority in this committee believes that it should go to the full House, you should do so to let the rest of your colleagues have a vote on the matter.
Are there any questions for the witness? Seeing none, thank you very much.
Thank you.
All right, so we're going to go to the last two witnesses on this bill, Julie Townsend and Leo Sullivan. While they're coming to the microphone, Frandy Fernandez from the AFL-CIO signed up against 5331, not providing testimony. You may proceed with your testimony, Julie.
It was already on, sorry. Mr. Chairman, members of the committee, thank you for allowing me to testify today in opposition to both House Bill 5331 and House Bill 5106. I'm Senior Policy Counsel with Purpose Financial. We're a South Carolina-based consumer lending company. We've been in operation for over 25 years. We do operate in 24 states. We're the parent company of Advance America. And Advance America is a licensed, regulated lender with 9 stores in Rhode Island. And you'll hear from one of our store managers in a few minutes. I'd like to give sort of a policy perspective, and he'll tell you a little bit more about our customers and our business here. We do have a long history of working with the Rhode Island legislature to establish appropriate consumer protections that are balanced with access to credit for consumers. Our company's sole purpose is to help each customer achieve their version of financial stability in the moment and in the future. Our customers are hard-working Rhode Islanders. They all have a bank account and they all have a steady source of income. The average age of our customer in Rhode Island is 49 years old. Their average monthly income is around $3,400. Around 48% are homeowners, and they appreciate our products and services. In 2022, Advance America had a 4.97 Google rating out of 5 just in Rhode Island. Our product here is very specific and is actually the lowest fee out of any of the states that we operate in. Fees may not exceed 10% of the loan amount or $10 per 100. The maximum loan is $450 because the face value of the check cannot exceed $500. So at $450 maximum loan amount, when you add the fee, the face value of the check will not exceed $500. The minimum term is 13 days. The maximum term is a month, depending on how you calculate that, 30 or 31 days, payable on the customer's next pay date. The way this works is that the customer writes us a post-dated check or authorizes a debit or ACH on their next pay date. Again, that's a minimum of 13 days or maximum of 1 month out. The value comparison that our customers are looking at, their consideration set, they're looking to avoid bounce check fees, which are far more than $10 per 100, or overdraft fees, especially when overdraft fees can hit every single day that an account is in overdraft. Late payment fees, missing bills altogether. Oftentimes, our services are much less expensive than the consideration set that our customers are looking at. Some banks or some credit unions and religious and nonprofit organizations do provide very limited unsecured credit services, but they're not widely available. Oftentimes they require wait periods or have strings attached. Oftentimes they're also subsidized through charitable donations. Our customers are not usually in a position to wait jump through a lot of hoops. They need to pay bills today.
One thing I will say is, I understand that, someone might need a bridge loan for 1 week. They're unable to make the payment for 1 week. They go somewhere, they need a loan for $200-300, maybe to make their rent or whatever. But with the situation that becomes the problem is when someone keeps chasing that loan week after week and continuing to do that. What protections are there in place for someone who runs into that type of situation where ultimately it does end up being over the 200% interest rate?
So in Rhode Island, a consumer is only allowed to renew that loan one time. They cannot renew it a second time. So they have the option of paying off and then later reborrowing. What we find is that consumers only utilize the product for as long as they need it to bridge the gap that they currently have.
But are they reborrowing for the same amount of money? So, say it's $300 rather than just renewing it, they're borrowing another $400. They're paying it off with that $400. They
have to pay off before they can reborrow. So there's not a situation where a person is borrowing more than the $450. They can renew it one time. Like I said, what we find is that the vast majority of consumers only utilize the product for the shortest period of time to bridge the gap that they have. And that might be 2 weeks, it might be a couple of months, but we're not talking about a year or years.
I mean, there has to be a general idea as to how many, like your customer base, how often they do it per year. Is there like an average of how many times a single customer may borrow?
There is, and we find that if you average it out, and this is not specific to Rhode Island, it is across all of the states where we do offer a similar product, 6 to 8 times a year would be the average that a person might borrow.
Okay. Representative Serpa.
Thank you, Chairman. It kind of dovetails with your question. You provided a lot of percentages on the average income, and you provided some other numbers. So do you have a percentage of, like a default rate? How many borrowers default? What percentage? 50%?
No.
10%?
No, ultimately, our default rate is actually very low. We do a lot, more than 90% of our customers ultimately repay their loan.
More than 90%?
More than 90% ultimately.
Do repay.
Okay. But what I'll tell you is that we offer a lot of options for our customers. We offer extended payment plans. I do want to address a question that was asked earlier, or a statement that was made earlier. We do not and are not allowed to, under federal law, present a check multiple times a day. That's not happening. So but the other thing is that we're not successful if our customers aren't successful. So we will work with them on extended payment plans, oftentimes at no cost. We have a variety of ways that we'll work with a customer in order to help them be successful.
So you said they have to have a bank account.
That's right.
What else? They have to have a
steady source of income. It doesn't have to be employment, and I will just tell you that I would like to, because we can't discriminate based on income. So a person could be on a fixed income such as Social Security income as well.
So if I needed to borrow, say, $200, right, and I'm retired. Okay, let's use me for an example. I'm retired. I need to borrow $200 to fix my car. All right, I walk into one of your, I'll call it a bank. What will you require of me? My ID, proof of address, who I am? What else?
Yep, and I'm probably going to let Leo speak to that one because he does this every day. But you're going to have a proof of income. You're going to have proof of identification, proof of social security card. Well, I'll let you speak to that so that I don't mess it up.
You're going to check my credit record?
It's a soft hit by factor.
You could put your microphone on. I'm not sure if your microphone's on. There you go.
Okay. There is a soft hit on your credit history through factor trust.
Let's suppose my credit is terrible.
It may come up with an apology letter saying, gee, we can't do business with you today, but here are the listed reasons. and steps that you can take to alleviate that.
You're going to say that to me?
I'm going to hand you that letter.
Okay.
With the apologies that we cannot give you a loan today. Here are steps you can take to address that issue.
Okay, so I go in to borrow 200, I give you my ID, proof of my Social Security deposit into my checking account every month. My credit's decent, so and I want $200, and you're going to say, okay, Pat, here's 200, and you have to pay. Just cut to the chase and do the math. Here's $200, and we expect payment in the amount of X amount of dollars by when? Just do the math for me.
$220.
By when?
On your next monthly payday. If you're paid the third Wednesday of the month, which is frequent for...
I do, yeah.
Okay, now if today's the second Wednesday of the month,
yeah,
we're going to give you a minimum of 13 days, so we schedule a month further than that, because we have to give you at least that 13 days. So it would be on your payday in the future, considering you're on Social Security, that Wednesday, and we say you can come in and we can swipe your debit card, take it off your debit card, you can bring cash.
So in a month, I'm going to owe you $220.
Correct.
The initial $200 in principal and $20 in fee.
Okay, that's all I want to know. Thanks.
Okay.
Are there any other questions? Seeing none?
Did you want
Yeah, I just had a few comments of my own. Thank you, Mr. Chairman, members of the committee. I'm Leo Sullivan. I've worked for Citizens Bank for a good number of years in Bristol, and I have worked in Advanced America, several different centers. Lately, I've been in Warren, Rhode Island. Some of the expenses that people come in and tell us about that they need some cash for: medical bills, energy bills, car repairs, car or health insurance premiums, groceries, back-to-school supplies and clothes. Our customers have a wide range of situations. They can be retirees and veterans. We have a pharmacist. We have a business owner, hospital and healthcare providers, teachers, state employees. We actually have an airline pilot. There are neighbors in your constituents. They vote. Keep that in mind. One thing I want to make a note of, our loans do not compound. It's a flat interest rate of 10%, $10 per 100. The 216% comes up as the TILA boxes. That's the federal regulation that we have to say if you do this 26 times a year, that's what you would pay. Most people look at it and say, oh, it's $10 on 100. That'll get me over the hump that I need to get over. Let me give you two quick profiles. We have a customer, Sandy. That's not her real name, obviously. Her daughter's parental rights were revoked a couple of years ago, and she became the foster mother of her young grandchildren. She's embraced her role as grandmother and foster mom. She's impressed with the financial support she receives from both Social Security and foster parents. She's equally impressed by the mental health networks available to her family. On the other hand, she is amazed at the wide range of unanticipated expenses that pop up when raising young people, a generation younger than her own daughter was. Non-prescription medical expenses, clothing for fast-growing children, and school supplies are expensive she can't budget for. They just come up, they've got to be taken care of. Cindy borrows from us when her expenses are greater than her anticipated income for the short term. She wants the support for her foster children to be transparent to the children, as she knows that the loan will be paid back easily. Another one I'll call Kim owns a business that matches people with similar skills for employment opportunities. Her clientele is diverse, and she works hard to make appropriate matches. She employs a digital assistant who's paid bi-weekly on Fridays. Sometimes Kim deposits revenue checks to her payroll account that were drawn on other banks. So her bank will make funds available in the future, so she takes out a payday loan, is able to pay her digital assistant for her work, and pay off the payday loan once the bank has cleared those checks. In summary, I'd like to invite members of this committee. We have 9 centers throughout the state of Rhode Island. I invited a couple of people I met outside, my own rep, who lives right up the street from me. If you want to visit a center, talk to our associates, or even as employees come in the door, just listen to the conversations that are going on, challenge them. Hey, do you feel you're trapped in this? Do you feel that you can handle the obligation you're taking on in order to pay it off and take care of what you need to support your family?
Are there any questions for the witness? Seeing none, thank you both for your testimony.
Thank you.
We just have one last witness, Kevin McElroy. If you could just keep it to 2 minutes, because we have a lot of witnesses here today, so.
Absolutely.
Is anything you'd like to add that wasn't already covered?
Thank you, Chairman Solomon. Thank you, Chairman Solomon, members of the committee. So I'm volunteering on behalf of the Rhode Island NASW. I'm here to support Bill 5160. Payday lending, it's a business model that historically preys upon those that don't have any other means of accessing loans. Payday lenders make it incredibly easy to fall into a cycle of predatory loans, as in most cases, one simply needs a bank account, sometimes a post-dated personal check. The primary target of this industry is people in economic distress without any other options. Let's say Joe is struggling to make rent and is being threatened with eviction or perhaps receiving shut-off notices from Rhode Island Energy. Joe has poor credit, can't get traditional types of loans. Joe takes out a payday loan. He must provide his account information to the lender or a check dated for the next payday, which is held as collateral by the lender. The loans are deposited in Joan's account. Fast forward next month, Joe cannot afford to pay back the whole loan, rent, or other expenses, but the funds are immediately withdrawn by his account, putting him in further debt. Joe finds himself having to take out another loan from the payday lender and thus enters an endless cycle of taking off loans to pay off debt, which will lead to more loans and more debt. This reflects the business model which funds the industry, an industry that is reliant on repeated and frequent loans. Lenders will make 75% of their money from those taking at least 10 loans a year. So it's not a business that is propped up by Joe taking one loan to help his bills for the month of February. It makes money because it's expecting Joe to be taking additional loans in March, April, May, June, so on. The demand for the product that payday lenders provide is created through desperation and panic, which will then be compounded through these high interest rates, which they will get regardless of Joe's ability to pay. This is a dynamic that is all too familiar to the lending company, as it knows the majority of the loans that they provide are to customers who are not in a position to pay off the loans fully when payday arrives. Rhode Island is currently an outlier among states in the Northeast in not capping payday lending at 36% annualized rate. We're currently closer to 260. Those opposing this bill might cite that these payday lending reforms reforming the payday loan industry would harm those living in poverty, and they might use they might state things that it would hinder people's ability to consolidate their debt. That doesn't make any sense, as the consolidation would subject that debt to an extremely high interest rate. It has long been recognized that payday lenders will target vulnerable communities, as it disproportionately affects communities of color as well as those in the military. In fact, Congress has acted at the federal level with a military lending act, capping interest rates at 36% APR for military members and their families, as payday lenders would congregate around military bases, reducing military readiness by targeting young service members. So my ask is simple. I'm asking that you pass this reform. This is a simple consumer protection. Payday lending reforms enjoy broad support among Rhode Island voters. According to polling from last year, almost 60% of voters in Rhode Island support lowering the annual interest rate to 36%. And out of the participants that responded negatively to the poll, 20% did so because they felt that the cap should actually be lower than 36%. Thank you so much for your time, and please consider this bill.
Are there any questions? Seeing none, thank you very much for your testimony. And that concludes the hearing on House Bills 5160 and 5331.